Hey, good morning, everybody. Welcome to Monday, May 4th. I hope that your weekend was good. You got some downtime, got a little bit of relaxation in as, hey, today's a new day. We actually get to see Highlands County start and the state of Florida start to open up a little bit, and we'll see some more movement around town. So excited about the opening up and to see how that might lead us down the road. As we get started today, I want to remind you that we're going to be talking today about some stuff that I'm reading a few articles now that I kind of agree with. And so we'll be looking at comparing now to back in 2000 in the dot-com bubble. So stick with us for the whole show as we get ready to welcome Dave here in just the next moment.
5, FM, Earth, Wind, and Fire are there. It's 8:39 here, 21 before 9. We've been having computer issues around here all morning. I should forewarn folks that like to stream us, use your cell phone app, because for at least a couple hours here, our websites are down, and we have no idea why, because we know we paid the bill. This is something weird. Have that fixed within a couple of hours. If you're on the radio with us or on your cell phone, it's time to check in on your money and see what's happening there. Time to check in with Phillip Statler from Statler Financial Services in Sebring. Phillip, are you open this morning?
We are open at the office and we are resuming our normal hours. I am still working from home today. I will be in tomorrow. So, yeah.
That's good. I mean, we're reopening 25% capacity for retail and indoor dining on restaurants, which retailers probably won't be a major problem. In mom and pop stores, now that we're kind of sort of out of snowbird season, I got to assume that's not going to be a major hassle for the retail stores. Restaurants, a couple of my smaller restaurant friends have said that means I'm going to have 2 tables open. I can't afford to do that. So few of the restaurants are kind of taking a pass for this phase 1. Is that kind of the read you've got?
Yes, sir. That's exactly what I've heard. It's just not worth it for them to try to open up for 25% inside dining. Now, you know, some of the folks that have outside dining, they can really, they can make that work really well, I think.
Oh, yeah. My friends down at the Sunset Grill are salivating because they got a great big deck. Dimitri's, I know, has enough inside seating to the point where he's going to do fine, and he's got a lot of outside seating as well. And there are a few others as well. But some of the smaller inside-only restaurants have a bit of a challenge. So this is going to be the gradual reopening that Governor DeSantis was talking about, right?
Exactly. So, you know, I was kind of on Facebook a little bit this weekend saying, you know, I'm not so sure. It's definitely slow. And I don't know that he's doing really justice to some of the areas that I felt could go ahead and open up to a limited basis. Like, you know, I need a haircut pretty bad, Dave. So I'm thinking, you know, hair salons and barbers should be able to open up on an appointment basis.
I saw you on the Facebook pages expressing that point of view, and I tend to agree. I would think that the one-chair salon places, or where they've got the rent-to-do places where everybody's got a private setting, we'd be all right being able to do that. But give DeSantis credit. He went down to Orlando on Saturday and had a summit meeting with a bunch of hairstylists and barbers there and had a productive exchange of views. He needs a haircut, too, he says, so he's got a personal reason for this. I think probably we'll end up seeing haircuts being available in phase 2, and it might be sooner rather than later.
I'm hoping so, Dave. But, hey, you know, we're not here to talk about haircuts and beauty salons and restaurants. We're here to talk about what's happening in the markets today as we head into May, because, Dave, May 1st was not a good day.
No, it was not. But so that's, well, we did have one sidelight to the reopening story. They're reopening over in Greece, I understand, and there's some questions as far as how well they're reopening, huh?
Well, you know, we're concerned here in the United States about getting retail and restaurants and barbers and salons back open. In Greece, they're up and going. They're trying to figure out how to reopen their brothels. Didn't know it was a thing over there, but evidently it is. And so they are going to require, get this, patrons and those that work there have to wear masks and gloves all the time. As an extra layer of protection.
And all we want's a dang haircut. And there are so many things, there's so many places I can go off of that, and I just don't like any of them. Friday was, like you said, an absolutely crapola day on Wall Street. Dow was down 2.5%. Nasdaq was down 3.2%. Standard & Poor's down 2.8%. Then over the weekend, not only did we start getting concerned about what the unemployment rate was going to be like at the end of the week, we also got a little bit of Twitter action talking about the return of tariffs with China. Can you think of worse timing to start that discussion?
Yeah, it just seems like we just got finished with that, right? And now we're going to add that back into the mix. That's not helping our markets this morning at all. And let me just add another macro thing in there for you too, Dave, that we didn't talk about before we went on there. But auto sales came in at an annual rate of 8.6 million vehicles for April, compared to a year ago, 16.5 million. That represents a 48% plunge in auto sales. And it's the worst they've seen, the lowest rate they've seen since they started keeping track of this back in 1980.
I was going to say that number like 8.5 million, that sounds like a number I'd expect to find in the 60s instead of being in the 2020s, wouldn't you?
It does. So I'm thinking that maybe we'll start to see some better deals on cars.
I expect so. They certainly have the financing deals out, and it shouldn't be a major shock given the fact that half the world was at home during the month of April, but we can only cross our fingers that it's pent-up demand that'll recover in May. We got a lot of expectations going on and a lot of reaction to the financial flurry from the earnings season. I noticed that UBS, one of the big companies that does a lot of ratings, they went through the banks, and they've downgraded Wells Fargo stock to sell. They downgraded PNC Bank stock down to sell, unless you think they're just bearish on financials in general. They raised their target for Citigroup and JP Morgan, so they were picking out some of our banks and saying, we got a real problem on the horizon, which kind of is a harbinger of things to come for a whole lot of different sectors. Wouldn't you agree?
I think that's a good possibility, Dave. I think that, they're not the only ones that I saw picking up JP Morgan as a buy and as a positive move. I have several analysts that came out last Friday with a buy on JP Morgan. So not sure what they're seeing there or why. And I'm not so sure how that contrasts with PNC Bank and Wells Fargo, other than we know Wells Fargo is kind of limited, right, on what their growth rate. And so outside of that, and, I think Wells Fargo is the one I saw on Friday that they are no longer taking any more home equity credit line applications.
Woo! That was one of the products that got them into some trouble a few years ago to begin with as well, opening up a bunch of those for people that didn't know they had them. So it wouldn't be a major surprise, but still seeing a major financial name like Wells Fargo or PNC, we don't have a lot of them down here, but they're one of the big monsters in the nation. To see them downgraded to sell by a major rating group, that just kind of makes you sit up and take notice, doesn't it?
Yeah, it does. It really does. As far as that means the banking industry, some of the banks are going to be on hard times.
Absolutely. We are in earnings season. We got a few household names that we're reporting. Do we have any good news we can share this morning?
I'm looking through, and good news is a little hard to find today, Dave.
Looking at and kind of afraid you were going to say that, but I had to ask.
We're more on the not so good side today. We got Tyson Foods. They missed by substantial amount. They came in at 77 cents a share compared to the $1.04 they were supposed to come in. Revenue was below the forecast, and they're faced obviously with multiple challenges with the COVID-19, and they're not sure how long all this is going to last. They're really struggling when it comes to Tyson Foods. On Friday, they were down 3.5%. Today, right now, they're down 7.25%. So, not a good day for them at all.
Some of that I've got to assume is affected by the supply chain issues of the meatpacking industry getting whacked so badly with with meatpacking plants ending up getting shut down or reducing capacity because of all the COVID-19 outbreaks in the meatpacking industry.
I think that was one of their multiple challenges. You're right.
Mm-hmm.
That, they, like I said, that was one, and they've got more to come.
Yep.
Now, Berkshire Hathaway came out and reported last week. They had a record quarterly loss of $50 billion. That's a B with the, billion with the B there. So, they had impact across the board on all their business lines. And one of their big things is they dumped every airline they had. So
I noticed that headline. That's almost amazing when Warren Buffett doesn't stick with the sector.
Yeah, so Delta, American, United, and Southwest were all in his portfolio. No longer are they there. Berkshire, they're trading down 1.23 right now before we get opened up this morning. So they're struggling a little bit, but they've got a record amount of cash right now, and we'll talk about that here in just a few minutes.
Okay.
So let's see, what else do we got there? We got Gilead's down today. I don't know really why, because they've gotten the green light to put together their drug remdesivir. I guess that's how you say it. That shows a quick recovery time on COVID. Oh, it's bounced back. I'm sorry. It was down when I first looked at it. It's actually back up now, 0.8%.
Cool.
It shows how fast things can change.
Yeah, my read over the weekend was that they've got permission to ship it now, so they're going to start shipping it off in the hardest hit sectors almost toot sweet, meaning New York could have it almost immediately.
Yeah, that's true. Pretty quick. Hertz is in trouble. We already knew that, but they have to either pay $500 million today or obtain a waiver. If they can't get the waiver, we will probably see them in bankruptcy within a matter of days. That's really about all I have on the company front, Dave, today. But I did want to talk about one of the analysts that I was reading about today. And he's comparing where we are today to 2000 .com bubble. Some people may not remember back that far, but I really do. That was the first bear market I went through. And so, he feels that stocks could drop another 40% from here. And he makes a pretty good case. And one of his cases is Warren Buffett. Warren Buffett stockpiled cash back in 2000, just like he is today. And it's kind of funny when you use him as a bellwether. Mm-hmm.
The ultimate buy and hold advocate of Warren Buffett.
Yeah, but he's sitting on, I don't know, $137 billion, I think, right now.
Yep, and drives a Buick. The guy's amazing. All the pundits with their, with their scenarios, one more vote into the bunch, and obviously not a good one down the line. But 2000 was an interesting time, and that was the time of overvalued companies to the hilt, most notably on the Nasdaq exchange. A lot of people lost their butts on the Nasdaq bubble, and a little bit in the Dow and the S&P, but nothing compared to what they did Nasdaq-wise. Was he basing this notion on the notion that stocks were overpriced, or simply that the economy was too shaky?
Well, I think he's looking at stock prices because he's just comparing charts most likely, but he looked at the Nasdaq 2000. He said how similar we look right now. That bear market bounce, there's a 40% drop in stocks, and then a 42% bounce off the bottom, which retraced about 60%, 62% of that drop. Just within, I think he said 4 months, it fell another 43% after that bounce. And so I think he's looking at the drop and the bounce and anticipating another drop.
Okay. Chart rhythms do tend to repeat themselves, and you and I have both been talking about testing the lows again. And it sounds to me, compared to that analyst, that testing the lows would beat the pants off of his prediction, wouldn't it?
Yeah, we'd be thankful if that's what we did.
Exactly. Resetting the table for the morning. Like we said, it was an off day on Wall Street. Everything was off big time on Friday. A lot of it was anticipation. A lot of it concerns about our discussions with China. But we're kind of nervous over the weekend, and it looks like things are continuing 45 minutes before we open, Phillip. What do we look like today?
We are definitely in the red today, Dave. We are seeing like the Dow has been bouncing somewhere between a negative down 200 to down 280. Right now it's down, excuse me, $230, down almost 1%. We've got the S&P 500 down 0.7, the Nasdaq down about 0.7 also. If we look at the commodities market, we've got silver and gold both up. Silver's not up by much, less than 0.1%. And we've got gold up 0.5% to $1,709 an ounce. And we got crude oil heading down off of Friday's close, down 2% to $19.39 a barrel.
All right. And the overseas markets were profoundly negative over in Asia. They followed our lead from Friday in our early futures numbers. Japan and Hong Kong and the other Asian markets over 2% down this morning. Europe's kind of mixed. Germany is off considerably, but England is holding its own this morning, midway through their day. Phillip, if there ever was a time for stability to count for a lot, if Warren Buffett is holding cash and not going into equities, that gives you an idea that a lot of experts are saying things could get hinky in the upcoming months. How do I avoid getting hinky with my retirement account and getting some advice from you?
Dave, now is a great time. We've seen this big bounce up. We've seen a run up in the markets. Now's a great time to reanalyze where you are and think about maybe it's time to take some more off the table. Give us a call at 863-382-0037. That's 863-382-0037. Hey, follow us on Facebook at Statler Financial Services. Check out our website, statlerfinancial.com, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday mornings on News Talk 730 a.m.
All righty. And back here tomorrow morning on Light FM, same time. Phillip, thank you so much. We'll catch you in the morning, all right?
All right, man. You have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Again, I want to thank you guys for joining us today. I hope that we didn't scare you too bad, but it is that time. We do need to get second opinions on our portfolios. If you're in that danger zone 5 to 10 years out from retirement, or you're already retired, you need to make sure that you don't have too much risk in your portfolio. Give me a call. Let us analyze your portfolio to make sure you don't have too much risk. 863-382-0037. Thanks. Have a great day, and I look forward to speaking to you again tomorrow.